Welcome to the show on this edition of Bitcoin Brief. It is Monday, July 13th, and we've got Tone Vays with us, our Bitcoin trader, educator extraordinaire, as well as Jimmy Song, our Bitcoin programmer and educator and consultant. And I'm Christine, a New York-based journalist. A lot of stories coming on, a lot of activity in the Bitcoin space. How's it going there, Tone?
Good. I can't believe how long this quarantine is lasting. I don't think it's going to get any better. You happen to get out. Looks like you're enjoying a little sun. Hopefully I can do the same soon. And just can't wait to start traveling again. Getting really like antsy here.
Yeah. Yes, I'm in the outdoors, out in the wilderness of the Thousand Islands, enjoying the fresh air and quarantining on an island. So all is good. How about you, Jimmy? How's it going?
Well, Austin seems to be locking down again. So we're getting through this weird time where government seems to want to put their boots on our necks or something like that, and do that for a long time. It doesn't feel good. I don't like it, but it is what it is. At least I can go outdoors and rock climb and things like that. So.
Yeah, we are seeing cases of COVID climate making record tallies in Florida and other parts of the Southwest. But in Bitcoin news, we've got a lot on our roster here. I'm going to start sharing my screen for you. Okay. So first up, it's the anniversary of this guy, the Bitcoin sign guy. You could see him behind former Federal Reserve Chairwoman Janet Yellen, buy Bitcoin. After that happened, the guy who photobombed Janet Yellen with the buy Bitcoin sign has received nearly 16,000 in donations. He provided a tweet with himself showing and confirming that he was in fact the guy requiring donations there. Hold on, I can't pull it up there, but you see him there. Comments on this story, Tone. Why was this such a big moment?
Yeah, that was a really big deal at the time, and it was kind of awesome. And when the memes hit, I thought it was like a joke. I thought that it was like those, like Trump opens like the swipe thing and people just write random stuff in there. And then I find out this actually happened. He really did need the donations because he got fired for that little stunt, which is not surprising. He was his name is Christian. I actually met him on a couple of occasions, actually. He's a big fan of our show. And he was a big fan of our show, by the way, before he did that as well, Jimmy. I don't know if you knew that. So he definitely knew who we were. And yeah, it was really cool. Bitcoin at the time was about $2,500. And the money that he made in donations, right now, Bitcoin is about $9,000. So that's at least 3x on that if he held on to that Bitcoin. So yeah. That was cool. I thought it was a great moment, and yeah, he's been known in the space ever since.
Yeah, he's well, it's good publicity for Bitcoin in doing that in front of a hearing behind Janet Yellen at the time. Jimmy, what are your thoughts? Good publicity for the Bitcoin community. Obviously, he was getting a lot of support, all those donations, which are probably worth way more than back in 2017.
I mean, he's made a killing off of the buy Bitcoin sign. If I remember, like the thing about like when it happened was that it was like the convergence of absolutely everything. It was right around when SegWit 2x was a big deal. Tone and I were doing shows like every day. There was a lot of people trying to figure out what the heck was going on, and then we got this, and it was sort of like a relief because there was just so much contention in the community at the time. Of course, Bitcoin Cash like forked like 20 days later, something like that, and that ended up being a major turning point in the entire industry, went on a bull run and everything else. But Christian's done really well with that. Obviously, he got the donations. I think it was like 6 or 7 Bitcoin, which is worth quite a bit. He also sold numbered prints of the Buy Bitcoin sign. I think he had 21 numbered prints of that same thing on a legal pad. And I think he sold them for like 1 BTC each. So no need to feel bad for him whatsoever, despite getting fired from his job, because he absolutely did well financially. He's trying different things in the space and promoting different things, and he's doing perfectly fine.
Yeah. Do we know where Christian is now?
Yeah, he was doing some kind of a project, like some kind of land thing.
Orbit, but yeah, Orbit's been around a long time, and it's he's trying to promote that.
One last quick comment before we move on, because we have like 8 more stories. I wonder if anyone wants to keep like a tally going. How much liquidity has been added in the world of Bitcoin with new Bitcoin versus how much liquidity the Fed has added with dollars since the day that sign went up in that meeting. So that would be a cool like running totals.
Oh, that would be easy to go find out. I'm gonna go look for it right now.
I'm sure someone's already tallied that somewhere on the interwebs. All right, so our next story is Consensus Polychain Tron Polychain Tron, Cipher Trace. Blockchain startups got $30 million in US PPP bailout loans. So the federal government has passed a consecutive number of coronavirus relief firms aimed at particularly mom and pop shops, retailers, restaurants, so that they could keep their payrolls going in the mid of shutdowns from the coronavirus pandemic. But a lot of crypto companies have also been claiming money behind this spirit. So more than 75 companies in the blockchain and cryptocurrency industry collected at least 30 million in payroll loans from the US government. And we have a list as well of who got what. It's all public information. We see Consensus received between 5 million to 10 million in April from Signature Bank. Cryptos Blocks also a loan between 1 and 2 million. Bittrex 1 and 2 million. Cipher Trace, Polychain as well, receiving between $350,000 and $1 million. Tone, you know, the Bitcoin community kind of prides itself on being independent from the government. What's your take on them coming back here and asking for these loans?
Wait, was that to me or to Jimmy? Sorry, because I started.
It was to Tone.
You want to jump in first on this one, Jimmy, and then I'll follow up.
All right,
yeah,
Jimmy,
so,
go ahead.
It's really interesting because in a way, the reason why they're able to get this money through the PPP bailout loans is because like they politically, it was hard to sort of discriminate and say these are legitimate businesses and these are not. So they basically haven't discriminated at all and said, if you're any kind of business, we will give you these loans, which I think turn into grants if certain conditions are met and so on. So as a result of that, a lot of, pretty much every company that wants free money has applied for this. And it looks like a lot of these altcoin companies or these quote unquote decentralized altcoin companies are taking this money. Now, the thing is, it's not really free money. It might seem that way because you're going to get, $1 million, $5 million, whatever, and you can get a good amount of money, but it doesn't come for free because what they've essentially done is give you a lot of money now, but they're expecting something later. They're going to expect compliance to regulations. They're going to expect you to report to them whatever they need. In a sense, it's the government sort of pre-buying surveillance that they're eventually going to want from a lot of these companies. And they're willingly sort of taking this money to do it. I've always said that these altcoins have a centralized single point of failure, and that government pressure would be very effective against it. What I didn't imagine was that these single points of failure would voluntarily enslave themselves to these government entities and put themselves in a position where they're going to have to comply with whatever the government wants them to do. But that's essentially what all of these companies have done. But it doesn't surprise me. I think it's in a way, par for the course, given the gap between their rhetoric, which is all about being decentralized, and the reality, which is that they are really centralized and need to feed from the government teat, if you will.
Hey, Jimmy, I gotta throw something back at you here really quick. I don't think that the arm of the U.S. government that surveils you has anything to do with the arm of the printing of the money. So I don't really. It's hard for me to go down that rabbit hole of borderline conspiracy that just because you took this money, somehow you owe them surveillance. I mean, you owe them surveillance.
I'm not saying that's the exact trade. I'm just saying that they're certainly going to be like, okay, like next time there's some sort of like pandemic or bailout or something like that, and they find out, okay, they didn't comply on these orders. There's already a significant amount of paperwork that you have to do saying that you are complying with all of these laws, complying with all of these regulations, and all of them. And if you receive the money, you have to comply with all of that. So, in a sense, it's it's for the future, and the companies are going to feel it, even if the government doesn't necessarily press them on it.
Well, from my understanding, the spirit of these loans is that, yes, you do comply with all the regulations and the rules. They are forgivable loans if the government deems that you did comply and it was meant for payroll. And so what some people have criticized these companies for is that, well, in the spirit of Bitcoin, you were supposed to be independent of the government. In many cases, you can work from home, so you're not impacted the same way that restaurants and retailers are. So there were questions of why these companies would be taking out these loans. I want to take a look at our next story, which is
Christine, I didn't comment on that loan thing.
Okay. Okay, good. Go ahead.
On that, because I'll let Jimmy start. So I just want to go through. So my view is this. Yes, this isn't exactly free money, but it is free money if your company totally fails, or you decide to run away with the crypto, or you decide to just walk away from this nonsense. What bothers me the most is if you just scroll through that list of companies, Christine, kind of somewhat on the slower side. And I'm doing like Consensus is basically straight up Ethereum. You have our next story. We're going to talk about Cardano. I don't understand why the US government is now bailing out Chinese companies with Tron. That's a story for another day. Maybe I'm sure Trump was very happy about that. Polychain Capital is, first of all, that's like a hedge fund, sort of. And they printed their own money. So again, it's just so frustrating. Electric Coin Company is responsible for Zcash. Again, companies that are printing their own money are now taking bailout money. I understand like token tax, it's a advisory firm. That's like more normal. My Ether wallet, are you serious? Then we have
Consensus.
there were others on here. Salt. The Salt blockchain took bailout money. This is like, it's really insane. I'm not happy that Unchained Capital did it. I actually like them. Factum. It even says in the article, which is now bankrupt, was able to get like $350,000. And Civic, full members, Vinny Lingham and Civic. Does that company still exist?
Their coin certainly does, yeah.
Man, here's the thing, right? So right now there's two shit coins, scam coins, whatever you want to call them, that are going through the roof: Cardano and Chainlink. We're going to talk about Cardano next. And everything that people say, oh my God, you're an idiot, you don't understand Cardano. Do you know how many times we've heard this about every single shit coin on the list, starting with number 10 right now, all the way through number 3,000? We heard this about Civic and how it's going to revolutionize the world, and we heard it about Tron and Tezos and God knows what else. I don't remember. Aurora Coin, if anyone remembers that one, that was going to change the world. Paycoin, everyone was going to be using Paycoin, from Amazon to God knows what else. Anyway, we've been there before, and now I'm ready to move on and talk about one of these companies that took the bailout money.
Okay, one of these companies was Cardano. So we got a tweet here. WTF, someone is shilling Cardano for farmers in very remote rural China.
So you see the picture of Charles
Hoskinson? From Tone.
Yeah, go ahead.
Do you think I could play this?
Maybe. I don't hear it. The audio may not be coming through.
Can you hear it?
I can't hear it.
No, but it's okay. You can just read the text of that tweet.
I can hear it. Yeah.
But he's quoted. He's quoted. You can just read it.
Okay, so he says, I hate the fact that we live in this environment as much as the people in Major League Baseball hated that other people were taking steroids. They had to make a decision. Do we cheat and win, or do we compete honestly and lose? So we decided to be a cheater, according to Charles Hoskinson. Okay, and so we had the response from Tony.
Go back to the other one, because I commented on that tweet. Go back one.
So I don't know how much more evidence is needed that Cardano is a centralized, unregistered security of a corporation whose CEO is taking bailout money. Only Bitcoin is decentralized. And we have another one from Tone. Charles Hoskinson, Cardano will become the most decentralized cryptocurrency in the world, according to Cointelegraph headline in February of 2020. And with a Tone tweet saying, I like Charles Hoskinson. He is fun to interview and to hang out with, but this old article takes delusion to a new dimension. Technically, is he not wrong? Eventually, our sun will turn into a red giant and swallow the earth. Which one do you think happens first? Tone.
Yeah, and if you scroll down in the article, I highlight the relevant parts in boxes. There they are.
Yeah.
So Hoskinson said he believes the hard fork will be seamless and easy. And then basically he says a series of additional upgrades, which should eventually turn Cardano into the most decentralized cryptocurrency in the world. And then we also have someone in our live chat that literally writes, Cardano is decentralizing 100 times quicker than Bitcoin did in the early times, which is actually true. Cardano is decentralizing 100 times quicker because Bitcoin never had to decentralize. Bitcoin was always decentralized. See, Cardano can decentralize 100 times quicker than Bitcoin every day, and they will never actually reach decentralization because they can't. They are a centralized company with a centralized coin. And like all these statements prove it, if your hard fork is seamless and easy, you are centralized. If you are planning to eventually decentralize, you are centralized. If your CEO is taking bailout money for the company that prints its own money, you are centralized. I don't know how else to explain it. I had a little bit of a rant on Cardano on the price show this morning. And here's the thing. Not every company in the crypto space is a scam. Even Cardano, the coding base of Cardano is using Haskell as a coding language, which the way Haskell was explained to me by a very respected programmer is basically the most convoluted, most complicated programming language you can ever choose to do. So it's kind of like if you want to go somewhere and you're going to visit your friend across town, which is maybe a 20-minute drive or a few hours walk, but you decide to fly there and fly your own airplane. That is basically how the language of Haskell was explained to me as a coding base, which I've never actually tried in my days of programming back in the day. So look, the view is this. Not every project in the crypto space is a scam, but if your project has invented its own money for the project itself, then the token that they created is by default a scam. It is slightly different for projects that straight up invent currencies like Litecoin and Monero, in which case those aren't necessarily scams, though Jimmy may debate me on that. I think those were just stupid projects, but those were attempts at direct competition with Bitcoin, claiming to be nothing other than money. I think they're stupid, but I don't necessarily think they are malicious or scams unless they were pre-mined. If they were pre-mined, then the coin itself is perhaps not a scam, but the person that did the pre-mining, that person is actually a scammer. In the case of something like Cardano, it is the coin that's the scam. And then you can, I guess, debate whether the people that created the coin knew that they were creating a scam or not. But the project themselves, I'm okay with that. Like, I have no problem with a project like R3, for example. We made fun of it back in the day. We called it silly. We said it's not a blockchain, but at least they didn't invent money. And we're going to talk about Abra later in the show, which, as far as I know, doesn't have a scam coin either. And we're going to talk about Coinbase later in the show, a company that we all hate, but again, not a scam. No scam coin. And I'll leave it there, and I'll let Jimmy be a little more technical on the issue.
Yeah, this whole thing is interesting because he's spinning a yarn, right? He's talking about things in a way as to make his coin look as good as possible. And this is the thing about these altcoin creators, is that they will always try to talk about their coin in the best light possible. And fact of the matter is, it's not decentralized. It's completely centralized. The fact they issued the token, they created the token, they had a token generation event, they created their own chain, and there's a company that's responsible for it, and he's the CEO, right? Like it's crazy that you can say with a straight face that it's decentralized when you're the CEO of the company that made the token. And as Tone said, if you're printing your own token, well, you're creating like sort of this token out of thin air, and you're telling people that it's decentralized. Well, who's doing the creating? It's you. It's the person that's creating it. So I know Charles is smarter than this. So it's disappointing to see how willing he is to lie about all of this stuff and just act like it's like steroids in baseball or something like that, which is a complete nonsense, right? Like he's saying he needs to go cheat and raise money in this way because everyone else is doing that. Well, maybe you shouldn't get into this industry, period, if you have any moral qualms about that. And his ends justify the means kind of morality is highly offensive to me, and I think he's just, it's from a technical perspective, it's not decentralized. From sort of marketing perspective, I think what he's doing is despicable. So I'll leave it at that.
We do have a question from a viewer, not me, Jimmy. Would you say that proof of stake is a crappy rebranded Lightning network?
No, it's not even anything like Lightning. It's just the way I describe proof of stake is like this. Proof of work, you're putting your money into like steel vault or something like that. Proof of stake, you're putting your money into like a paper vault. It's got zero security. It's like proof of work, you actually have to do the work. Proof of stake, you just need some signatures from whoever got designated as the signer. So it's got zero security, and it's centrally controlled by whoever is signing. Now that could rotate or whatever, but it doesn't change the fact that there's no real security there. So You know, all of that is to say that the you know, Cardano and all of these other ones that are playing with proof of stake or are proof of stake, they're barking up the wrong tree. And yeah, I mean, I guess in a way they're doing that because they have to. They know that Bitcoin has won the proof of work thing. So, but yeah, it's kind of ridiculous.
Yeah, and yeah, proof of stake is complete and utter nonsense. There's absolutely no security there. And the crazy part is you can Google all these articles that try to argue that proof of stake is more secure than proof of work. It's literally like arguing that flat Earth is the real theory versus the Earth being round. It is actually that stupid to believe that proof of stake has any form of security whatsoever. Now, Charles Hoskinson, again, I like Charles. Charles and I kind of hang out. Maybe not after this show. We'll find out. But Charles started out with his first project being alongside Dan Larimer in creating BitShares. Dan Larimer is the father of proof of stake. And Dan Larimer is also famous for the Satoshi quote to Dan Larimer: if you don't understand, if you don't get it and still, if you don't understand it and still don't get it, I no longer have the time to explain it to you. Which was a quote by Satoshi directly to Dan Larimer on Bitcoin Talk forums. Yeah, there's really not much else to say about this kind of insanity. There was one more comment in a live chat I kind of wanted to address. I'm trying to remember what it was. Oh man, give me 1 second here. It wasn't. Oh yeah, here it is. Here's a comment, and again, I hear this all the time. But the Cardano company is trying to build a decentralized protocol. It is easy to criticize, but you have to give credit to them for what they are trying to achieve. No one knows yet for sure. No, we know for sure. You as a company cannot build a decentralized project. This is what drives us nuts. We do know for sure, right? It's like someone is creating a coin trying to prove that the world is flat. And most people are smart enough to say, that's insane. I'm not going to give you any money. And then there are people all over crypto Twitter saying, it's pumping, buy in. Okay, no, we do know for sure that they are incapable of building a decentralized protocol because centralized protocols do not get built by companies. That's not how it works.
Yeah, unfortunately, it's all smoke and mirrors in order to pump the coin and then dump it on retail, something like that, which has happened over and over and over again. And yeah, Cardano is one of them. And yeah, they're pumping right now. It'll get dumped and it will perform worse versus Bitcoin, you know, for the foreseeable future. It just, you know, for short periods, it might outperform Bitcoin, but that's just what happens.
We do have a qualification on that from that viewer. Not me saying that. The question was about proof of stake versus Lightning, not proof of stake versus proof of work.
I know, but I mean, Lightning is between two parties, and they both have a say in how the Lightning channel resolves. Proof of stake is like, you know, however many signers, and the entire ecosystem of people that are in it have to abide by whatever they say. So with Lightning, you're in control. You're in exact proportion of control that you should have. With proof of stake, it's you know, it's whatever these people decide, everyone has to agree with. It's a very different thing.
Yeah, and also Lightning is being built on top of Bitcoin and actually utilizes Bitcoin itself. So your underlying layer is secure. In this case, they are building an insecure underlying layer. So anything built on top of it is basically being built on top of a house of cards. And Ethereum, as I felt, proved this years ago, but yet here we are as we move on to our next story.
All right, our next story is one on, all right, one of the, let's see, Ethereum 2.0 in 2021. Okay, so we've got Ethereum's 2.0's phase 0 may not go live until 2021. Project researchers says the initial stage of Ethereum 2.0, dubbed Phase 0 may not go live until the start of 2021, according to a researcher involved in the project. Ethereum Foundation Justin Drake was asked during a Reddit Ask Me Anything session on Friday when the deployment of Phase 0 would begin. As previously reported, one of the main factors behind past launch delays was the multi-client approach being spearheaded by those involved in Phase 0's development. And so Drake cited a public testnet with more than three clients was running smoothly for 2 to 3 months, and a bug bounty program similar to bounty.ethereum.org running for 2 to 3 months, among other items, as some of the things I want to see before Genesis. In response to the question before, noting all the above cannot happen in the third quarter of 2020 with Thanksgiving and December holidays. I'd say the latest practical opportunity for Genesis in 2020 is mid-November, 4 months from now. As such, I'm now inclined to say that the earliest practical date for Genesis is something like January 3rd of next year, which is Bitcoin's 12th anniversary. All right, let's go with Jimmy first. What's your take on this slow development, shall we say?
Yeah, this is not a surprise. Ethereum is well known for continuously delaying things. Back when they did their crowd sale back in 2014, they told people, you know, in 6 months, we're going to have Ethereum up and running. Of course, it took more like a year and a half. They also said in 2014 that we're going to move to proof of stake in a year or two. They still haven't moved to proof of stake, and it's like 6 years later. Yeah, they put out, they have a tendency to put out these very optimistic timelines as a way to pump the token, and that's part and parcel of what they do. Is they get the community excited, make it seem like it's happening sooner than it is, and then they just sort of string them along as they fail to deliver. You know, the initial Phase 0 was supposed to be this summer. It's obviously not happening. And according to that Reddit thread, you know, it looks like early next year is the earliest, which probably means that next summer is probably a little more realistic. And that's just Phase 0. It's like the absolute basic stuff of Ethereum 2.0. It's not, there's a lot of the other stuff that they want to put in there. I think they put out something like a 5-year roadmap. So I'd be really shocked if Ethereum 2.0 comes in under like 8 years or something like that. Phase 0 probably happens in the next 2 years. Phase 1 happens like in the next 5, and then maybe Phase 2 in like the next 10. But by then they might have run out of money, or people might not be interested. So who knows if it'll finish at all. So yeah, this is something that Ethereum does over and over again, and yeah, it's normal, and we shouldn't be surprised at all.
I'll show this little follow-up message from Vitalik saying that, for what it's worth, I personally quite disagree with this, and I would favor launching Phase 0 significantly before that date, regardless of level of readiness. Tom, there seems to be some confusion here. What are your thoughts?
Well, Ethereum is slowly becoming more and more irrelevant. Of course, every year a new Ethereum destroyer comes along. This year it happens to be Cardano. Next year it's going to be something else. Last year it was Tron. I think the year before it was the hype over Tezos, and you know, they always bubble up. All of these Ethereum copycats. But at the end of the day, it's going to be liquid. Everything is going to move off of Ethereum and onto liquid, because everyone's going to want a stable underlying blockchain for their project. However, we've been waiting for this from the beginning. I hope I'm alive to see it. And look, a transition from proof of work into proof of stake is not easy. And now Ethereum is like the worst of both worlds. They are totally a centralized company, but they are not centralized enough to force everyone into proof of stake. Because good luck telling all of your miners that they have to throw away their, in some cases, multi-million-dollar operation that they've invested in and stuff like that. I've always said that going to proof of stake is going to be almost impossible, if not completely impossible. And when Ethereum goes to proof of stake, the ETH logo will stay with Vitalik Buterin because he is the master of that domain as a centralized company, and Ethereum is the stock of Vitalik Buterin's company. But the remaining Ethereum, the current chain of Ethereum, will become ETW, which stands for proof of, ETW, which stands for work, Ethereum work. I coined that term about 3 to 4 years ago, and I'm still waiting for Ethereum to completely split between proof of stake and proof of work with 2 different tickers. And all of the scammy ICOs built on top of Ethereum will need to decide, do they go with the unproven and insecure proof of stake model that Ethereum may or may not build, or do they stay on what is currently working for now, being the proof of work Ethereum chain, which of course you can't run a node because it has way too much data. So good luck with this nonsense. And the sooner Ethereum, the sooner the nightmare of Ethereum comes to a grinding halt, the better off humanity will be going forward.
All right, so that's your latest update from Ethereum. A lot of confusion there, and Tony and Jimmy are not impressed. Next, we've got the SEC, CFTC hit crypto app Abra with $300,000 worth in penalties over illegal swaps. So we've got crypto financial app Abra has settled charges from the Securities Exchange Commission and Commodity Futures Trading Commission relating to its offering of swaps deemed unlawful by the regulators. In 2 statements on Monday, the SEC and CFTC said they had filed charges against Abra and its Philippine-based partner company, Plutus, which had both settled with the 2 market watchdogs. The SEC formally charged Abra and Plutus with selling security-based swaps to retail investors without registering or selling them on a recognized national platform. Meanwhile, the CFTC charged both with entering into illegal off-exchange swaps with US and overseas citizens. Abra and Plutus have agreed to settle both suits $150,000 each without agreeing or denying the accusations of the order. Abra launched as a Bitcoin remittance app in 2014 and has upped the number of crypto-related services to include more coins and other services over the years. The SEC found fault with Abra for offering retail investors contracts that provided synthetic exposure to the US stock market while not actually securities. The SEC says security-based swaps were nonetheless subject to US securities laws. All right, so Jimmy, there was some confusion earlier, and I mean, operating as a crypto company, you're not sure whether or not how much you should be dealing with US regulators. So what are your thoughts, Jimmy?
Well, so Abra was in kind of a weird situation because they started this product where you have essentially people wanting exposure to stocks, but it's more like gambling. They don't own any of the underlying, and they would, Abra would figure out how to hedge so that they could make money, but allow their users to get exposure to the price volatility of the underlying stock. And the SEC, they started talking with the SEC, and the SEC told them, no, you can't do that. And they basically stopped in the US for a few months, and then relaunched their product from like a foreign entity from the Philippines, something like that. And then they made it available everywhere except the US, and essentially having the same product. Of course, the SEC wasn't very happy about that because it turned out that there were at least a few users from the US that were able to get in, whether it was through VPN or something. They were able to use the Abra app in order to get in on this price action and be able to bet on stocks without Abra being regulated. And that's essentially what they're getting fined for. It's kind of a strange thing because they do use Bitcoin sort of under the hood to make all of this work somehow. I'm not really sure exactly how they do it, but that is their business model. This is the sort of thing that happens when you get on the SEC's radar and you piss them off, is that they're going to demand their pound of flesh.
Mm-hmm. Tom, do you think that this clarifies more for crypto companies that are dealing or going or even indirectly dealing with U.S. exchanges or U.S. securities. Does it provide them more clarification on what is out of bounds? What are your thoughts?
Not really. Okay, so let's back up here. So let me, because I know I bash everything. So let me give Abra a little bit of credit before I totally bash them for like the 100th time. At least they don't have a scam coin. All right, so let's start with the positive. They were one of the few companies that did not scam people with an ICO. So that's a positive. And that's where it pretty much ends. So from day one, I mean, basically, Abra has pivoted their business more times than the show Silicon Valley. If anyone watches Silicon Valley, the Pied Piper company from Silicon Valley, Abra has pivoted more often than that comedy show. So Abra started out with all kinds of businesses. First, it was going to be in-person Bitcoin exchanges. They were going to compete with local Bitcoins. They realized they couldn't do that. And then it was going to be all about remittance. Then they realized that there's no money in remittance, and it's one of the dumbest businesses in crypto to try and do remittance. It makes no sense whatsoever. We've been talking about this as far back as 2014, that remittance with crypto is nonsense. Then they pivoted to compete with something else. And then they eventually pivoted to compete with Robinhood. And all they keep doing is pivoting because they don't have a plan. They have a CEO with a lot of money who talks great, an amazing public speaker, gets everybody hyped up, can get investors on board, early Bitcoin adopter. So he can afford it. I'll give him props for never creating a shitcoin. But I've never seen another company in crypto pivot this much. Now, as a startup, pivoting is normal, but pivoting to a completely different business every single time, and each one is sillier than the next, and eventually you're going to run into breaking security laws because somehow one of your businesses needs to bring in some kind of money. And if you're not able to print your coin, then you have a problem. My problem with the SEC is that they keep going after either low-hanging fruit or like giant fruit that's like unrelated. So they're going after like little things like Abra, which I keep calling them silly businesses. Do I think that they should have been the ones that got hit by the SEC and CFTC? No, I don't think they were doing anything that bad compared to the 1,000 ICOs that literally printed their own securities. So this is my problem with the SEC. And then they go after Telegram, which tried to do the most honest raise by giving away what was more like a security token than anything else. So my problem is these regulators keep going after all the companies. Yes, they're doing wrong, bad things, these companies. But like, I actually want to see them go after something that's relevant, something we've been screaming about on the show for 5 years, and they still haven't done that, which is annoying and frustrating.
I would say a lot of these companies, though, don't even know that they're doing anything wrong. They're stepping into uncharted waters, and the rules and the regulations and the guidelines are basically non-existent because the SEC has been really slow to make any. I think there is talk of having some sort of guidelines, rules, or clarity on this at some future date. But in the meantime, a lot of entrepreneurs, a lot of startup companies are kind of, well, we want to get going. And so there is that tension between the slowness of regulators and these companies that want to build things. If you have any other comments, I'll move on to the next.
By the way, quick thing. Abra should have known this is going to be a problem because one broker used to do this. This was what one broker did. This was one broker's company, and they got taken down completely. So I don't understand why you're going into a business where a similar business literally got taken down for it. So I don't know. Like there's so many questionable decisions with every single pivot by the Abra CEO. That it just makes no sense. But I do applaud the fact that he never, created a shitcoin. Small positive there.
All right, you're one small positive, Abra. All right. Speaking of asking for money, Coinbase plans first ever investor day amid talk it may go public. All right, so Coinbase has scheduled its first ever investor day for August 14th, amid rumors that the crypto exchange is exploring a public stock listing. It's unclear, however, whether the virtual event is related to the rumored efforts to go public. A Coinbase spokesperson confirming the meeting is coming, but said it was meant simply to facilitate a wider understanding of cryptocurrencies and blockchain technology. So this will not be a traditional investor day, but rather an opportunity to hear our perspective on the crypto economy and learn about Coinbase's role in the ecosystem. Reuters also reported earlier that Coinbase was seeking legal teams in advance of filing for a public offering with the SEC ahead of a direct listing. In a direct listing, shareholders in the private market are able to sell their holdings, though the company itself does not issue new shares or raise additional money. An investor day can often be a harbinger of a planned direct listing. And as A16Z noted, it's one of Coinbase's investors, including leading a $25 million Series B round in 2013. Okay, Tone. What do you? I mean, there have been a lot of talk about Coinbase going public. What are your thoughts on this move?
I mean, I think they should. I see a company go an IPO, especially a company like Coinbase that has a lot of competition, is a way of, giving their investors their money back in a legal fashion. So this is where their early investors will get to sell on the open market in a legal way. Again, I applaud Coinbase for never having a shitcoin like Binance because it's just not needed. But that's pretty much where it ends. The CEO couldn't hate Bitcoin anymore. I think I was on stage once and people asked me about Coinbase. And I said, imagine if Jeff Bezos hated online shopping. That is what Brian Armstrong is to the Bitcoin community, while having one of the biggest companies that will probably go public and make a lot of money for their investors on the public IPO. I do not have a problem with this. He's following the rules and regulations. I hate the fact that he is into shitcoins. He had more Ethereum than he had Bitcoin. He was supporting Bitcoin Cash and Bitcoin XT and basically everything other than Bitcoin. He wishes Bitcoin didn't exist. So obviously I have a problem with him personally for his views, which are insane. And at the same time, I'm not happy with the fact that they are not fighting for the privacy of their users. It's like they want to give away as much information to the government as possible. Even Apple fought for their users when they went to court against the US government in order to maintain the encryption on their phone, saying, no, we're not going to break into a person's phone, even because that creates a very slippery slope on future things. So even Apple is fighting for the privacy of their users more than Coinbase. And considering Coinbase is in the crypto space, you would think that they would go out of their way to fight for their users versus going out of their way creating companies to spy, creating arms of their company to spy further on the Bitcoin community. So I will end it there and hand it off to Jimmy.
Well, I would also wonder about the timing, Jimmy. Why now? We've seen that lift other tech companies, Uber, trying to go public before the economy tanks. So right now we're in a very questionable environment with the economy. Why are they coming out now during a pandemic to IPO?
Yeah, it's a good question. I generally like the whole process of auditing and the things that you have to file in order to go public. I've been at a couple of companies when the company went public, so I'm kind of familiar with the process. It's at least like a 6 to 12 month lead time, and I'm guessing that they're hoping for a bull run right around when they go public, so that people can use Coinbase as a proxy towards Bitcoin and get a lot of hype that way and cause their valuation to soar. That said, I mean, Tone's right. It is good for their investors, as like going public nowadays is basically a way for early investors to exit. I suspect that they're pretty overvalued already. just because of all of the competition that they're encountering. And they're having to, they've been basically forced to list new ICO tokens or altcoins like once a month or once a week or something like that as a way to keep up their revenue. I can't see that really being sustainable, because really the thing that drives their business is Bitcoin. And a lot of the people that are buying Bitcoin are moving on to other platforms, places like Cash App or River or Swan or something like that, which are much more friendly towards actual Bitcoiners and aren't shilling lots of other coins that are completely irrelevant to most of the population. So, I mean, it's interesting. I'm not sure how to feel about this, because I'm obviously not an investor at Coinbase or anything like that. It is good for, I guess, the people that work there. But I don't know if them being a proxy for Bitcoin, which is what will happen in the absence of an ETF, will be like a very good thing for the industry, because their stock will soar and they'll sort of have more of the narrative as a result. And I would not wish that for this community.
Yeah, I'm a much bigger fan of Kraken. So I would rather see Kraken go public than Coinbase. At least I know the Kraken CEO loves Bitcoin and does fight for the privacy of his users, something Brian Armstrong doesn't. So I would rather have Kraken in that position than Coinbase.
Yeah, good point on Jimmy about, it takes a couple months before an IPO gets on the table, and so they probably had this cooking up for a while, and so lo and behold, a pandemic happens. They probably hoped that the bull run would have lasted longer for this pandemic that we have around the world. And so maybe now they're just trying to cash in, try to get maybe some volatility. We're seeing a lot of volatility, and so the kind of investors that might buy this stock might be those who like the volatility, want to bet on something like Bitcoin. Will be interesting to see what happens and what to make of this investor day in August. Our next story, this one's weird. Microsoft files patent for crypto mining system using body activity data. When I first read this, that got me a little creeped out. Microsoft files crypto-based patent which would enable individuals to mine crypto using body activity data. So we have tech giant Microsoft is looking to develop a cryptocurrency system which enables individuals to mine cryptocurrency using their body activity data, eliminating the need for specialized mining machines. Microsoft published a patent dubbed cryptocurrency system using body activity data on March 22nd. Their paperwork details a method of crypto mining which exploits data associated with a user's body activity to exercise a new form of proof of work. The document further details, for example, a brainwave or a body heat emitted from the user when the user performs the task provided by an information or service provider, such as viewing advertisement or using certain internet services, can be used in the mining process. Jimmy, you're our tech guy. What is going on here?
Yeah, it's absolutely ridiculous. This isn't proof of work. These are micro tasks that are that are more appropriate for something like Amazon Turk, right? Like where you're identifying, viewing ads or filling out surveys or something like that. I'm not sure why they're calling it sort of mining, but these are tasks that humans can do that machines have a hard time with. So they're saying, well, okay, they filled out 40 surveys or identified motorcycles in 1,000 pictures or something like that. I mean, I guess that's what they're saying is kind of like the proof of work equivalent here, the sort of task that only humans can do. But this just seems ridiculous. It's the exact sort of thing where as machines get better, they're going to be able to identify motorcycles in a picture. They're going to be able to fill out surveys in some reasonable way as to make it seem like it was actually done by a human. This is it's actually just being able to pass a Turing test. I'm not sure why they need a patent for this either, unless they're planning to launch their own coin or something like that. I mean, I get that there are captchas and things like that which require this, and maybe they're saying, well, we can put all of that work into a chain and show that it's actually for real. But I'm not sure how you verify it, right? Like if you're a computer, how are you going to verify human work? The whole idea is that as a computer, you're not very good at it. So you need, in order to verify the proof of work, you need another human to verify that this other human did the right thing. So I don't know how this works, but it seems completely unworkable to me.
Tone, this is another entry from a major tech company getting into cryptocurrency, blockchain technology. What's your take on this brainwave or body test emitted?
Like Jimmy said, there is nothing like this is just insane. And this goes to the people working at Microsoft don't get it. And we were saying that years and years and years ago when Microsoft was saying, oh, we're testing Ethereum and we're testing this and we're testing that. And eventually it's going to come down to Bitcoin like it's starting to. But this is, again, more people employed at Microsoft, and a lot of people, it's their job to come up with patents, and they just come up with whatever nonsense they can. Like, I have no idea who's reviewing this at the US Patent Office in order to grant a patent on this. That's the thing. First of all, this is not proof of work. This is proof of whatever the hell they come up with. And I remember when I was in Austin, Texas at the University of Texas, and Jimmy was on a panel arguing with some IBM guy who thought he knew what a blockchain was. And at one point, Jimmy had no choice but to say, it doesn't matter what your project is. And you mentioned proof of planting trees. It doesn't matter. Like, it's all nonsense. The only thing that matters is proof of work, actual work by a machine, not by what you think is a human. But reading this article does sound like they want to create their own cryptocurrency or their own currency. And I guess they will pay you by watching ads, and they would have some kind of a metric to know if your device has shown you ads, and you may have to connect something to your brain so they can measure your brain waves to see if you've watched the ad and how you reacted to the ad. And then they will pay you in some scam coin for watching the ad. This is no different than something like Steemit or something like Libra, but fortunately, for people that created Steemit and Libra, they're dealing with a very low IQ community that believes in those coins, and therefore they don't need to actually monitor their brain function because nothing's really going to come up anyway. And that's why you believe in those coins that pay you in their own money for using their product of their service. And just like Steemit, the rest of them aren't going to go very, very far.
That's really scary, though, that these tech companies are actually thinking of this. They're thinking of monitoring your brain waves, paying you in whatever coin or whatever they come up with. Like, they're thinking about it. They're trying to come up with ways to dominate a section of the industry and gain more control over people's data, movements, and privacy. So if you have any more comments, I'll move on to the next story, you guys. Okay. Next, we have Bitcoin mining difficulty sets new record high 2 months after halving. 2 months after the network's halving event, it's harder than ever to mine Bitcoin. Bitcoin mining difficulty, a measure of how hard it is to compete for block rewards on the network, just set a new record high of about $17 trillion on Monday. This marks almost about a 10% jump from the previous record of about 16 trillion posted in July, according to Bitcoin.com's Blockchain Explorer. Now, the new record comes a little over 2 months after Bitcoin's halving on May 11th, which reduced the block subsidy from 12.5 Bitcoin per block to the current 6.25 Bitcoin per the network's design. The latest figure also surpasses the pre-halving high seen in early March. Jimmy, what's going on here? Why is it harder than ever to mine Bitcoin?
Well, it's because there's a demand for it, and the technology keeps getting better. The thing is, there's a lot of new mining equipment that's coming onto the market, and it's significantly more efficient than a lot of the mining equipment that's already on the market. So, by leveraging the new equipment, you're able to make bitcoins and run it at a profit in such a way as to, give profit to somebody. And there's a lot of people that are in accumulation mode, especially miners. And that seems to be what's going on, is that they're accumulating while the price is relatively stable. And there's a lot of energy and electricity that's probably a little bit cheaper because a lot of industrial usage just isn't getting used right now. So I suspect that's what's happening. What this story tells me is that the mining death spiral stuff really needs to die in a dumpster fire, because it's 2 months later and the difficulty is at an all-time high. And a lot of the mining death spiral people were like, well, a lot of these miners will go bankrupt, and then that'll pull even more hash rate off the network, and no one will be able to make a profit or whatever. That's not what happens. It's actually a very competitive space, and a lot of the people that know how to get the best deals on electricity and mining equipment and data centers and things like that, they're the ones that are sort of pushing the difficulty, and it looks like they continue to do so. And this is an objective metric that anyone can take a look at. Whether or not they're doing so profitably, that's another question. I suspect that they are, but yeah, I mean, this is what happens in a market.
Yeah, another comment here is the increase in difficulty reflects increasing computing power being applied to mining Bitcoin. The record hash rate also seen Monday signals that investment in state-of-the-art mining machines continues to grow after the halving, even though the price of Bitcoin has remained stuck in a range between 9,100 and 9,500 since early July. I almost wonder, we see that a lot of retail investors, especially millennials on things like Robinhood, driving up the markets. Could we see also another investment from younger people into mining? What are your thoughts, Tone?
Yeah, I'm pretty much in agreement with Jimmy fully. Everyone thinks that, see, they're projecting their views of shitcoins onto Bitcoin. Yes, there is going to be a death spiral in mining of every single proof of work coin besides Bitcoin. About an hour ago when we started the show, someone said, why is Monero stupid? Well, one of the reasons, and that's not the only reason, but one of the reasons why Monero is stupid is because Monero, the value of a Monero will never keep up with increasing in price, which is required in order to maintain a healthy mining structure. Litecoin, same exact problem. So eventually, the mining death spiral will hit all of these other proof of work coins, but it will not hit Bitcoin, because of the underlying fundamental demand for the Bitcoin and how every other shitcoin relies on Bitcoin's existence. And all of these things drive more and more people into Bitcoin. And a lot of people, like, look, the closest you can come to printing your own Bitcoin, like you do with the shitcoins, is by mining it. It's also the most private way to earn your Bitcoin, and one of the most secure ways to earn your Bitcoin. And I can see mining at a loss, because those mined Bitcoins are going to be very, very valuable for many, many reasons. And there is enough demand for this mined Bitcoin, and people still think they can, beat the market by being a miner instead of buying the Bitcoin itself. And I'm happy that these people exist, because they continue to add more security with the hash power to the network. So yes, a lot of young people are still coming into the space, and they think they can have an advantage with mining, and I'm glad they exist. And I need to update my one miner that is running and not really making any money, but it's just there for fun.
This story actually ties in with the mempool analysis. Jimmy? what is going on with the mempool?
Well, the mempool is doing what the mempool does, which is that there's, we're, we had basically everything clearing over the weekend, but right now we're on Monday, and Mondays you have a lot of people that are withdrawing and so on. And we know about what happens with BitMEX. It looks like there's a lot of transactions going on right now. If you want to get in on the next block, you're going to have to pay 20 to 30 satoshis per byte. But if you're willing to wait, I think you can get in for less than 10 without too much trouble within a couple of hours. If you're willing to wait overnight, I think you could probably get in pretty close to 1 satoshi per byte. We'll see how much of it clears overnight. But we've seen more than this clear in one day, so I think we'll be all right.
Okay, and we want everyone to remember that Jimmy is the author of Programming Bitcoin. Learn how to program a Bitcoin library with this hands-on guide from one of the leading teachers on Bitcoin and Bitcoin programming, author Jimmy Song. Shows you basics, including the math blocks network and transactions behind this popular cryptocurrency and its blockchain payment system. You'll also learn how simplified payment verification and how proof of work works. When we had lots of questions on proof of work and Lightning today, Jimmy, so maybe that viewer should buy your book.
Possibly, yes.
All right. And we also see the markets taking a tailspin right now. And so I'd love to hear Tone's take on what is going on with US equities today.
Yeah, I did a price video this morning, but the market's totally tanked after 1 p.m. And of course, Bitcoin went down with it. So I'm gonna take a quick look. But Jimmy, I wanted to show you this. I plugged it this morning. So this is the closest I'll get to a Lambo. So there is like a wallet and purse and accessories maker that uses vintage leather from old classic cars. And he has a Bitcoin, the little logo there. I don't have maybe I have to put the light on it here. Do you see a little Bitcoin logo right
Yeah,
now?
I do see it, yeah.
So he has the Bitcoin edition. I mean, like it's a big website. They sell a lot of stuff. So the Bitcoin edition applies to wallets made from Lamborghini leather. So this is the 1972 Lamborghini Urama, and the website is zeit.works, zeit.works. It's kind of there on the wallet. So that's really cool. So they sent me one of these. They're not cheap, but I think it's cool. Vintage leather from a 1972 Lamborghini.
Nice.
All right. Let's
the budget version of the Lambo.
Yeah. So let's just go really quickly. So I was looking at Tesla today. Jimmy, you're gonna love this. Tesla fell from 1,800 to 1,500 in a few hours.
Wait. It's over 1,500? When did it get to that?
It was $1,800.
Tone, oh no.
Oh no! He was starting to share his screen. Wait,
there it is. All right.
There it is.
Okay, I got a little delay. Yeah. So, ooh. Am I still on?
Yeah, so Zoom.
Yeah, no,
Zoom
you're on right now.
Zoom hit a little bit of a lag. Yeah, so Tesla is up. Tesla was a $350 stock in March when the crash happened due to COVID. Tesla was at $1,800 a share this morning. And then it tanked $300 a share in the afternoon. According to my metrics, Tesla was all ready to top on Friday, and it looks like it finally topped today. I didn't realize this was happening. I looked at Tesla in the morning, and it was literally pumping up, and then I just saw it. So the stock market was pumping. When I did a show this morning, we were literally breaking out to this new swing highs, and then after 1 p.m., it basically tanked almost 100 points. And also this morning, of course, Bitcoin, and today I was expecting a top in the market today. And like I said on this morning's videos, I had a big dilemma. as to what I think about the market. On the one hand, I don't believe in double tops. On the other hand, this is a very critical top. That's why you see a red arrow right there. So I did expect markets to pull back, and just because you're expecting a pullback doesn't mean.
Hey, can you get rid of that zoom window tone? It's like it's
my
a big
Yeah, just
eyesore.
put an X.
My bad. Right there. You mean the little? Oh, that zoom. I got rid of it.
It's still there.
Oh, we still see it.
Oh, it's gone on my end, so I don't know.
Why don't you unshare and share again? Maybe
Okay.
that'll do it.
Let's try this again. Yeah, because I closed that window from my side. I didn't know it was still on the screen on your side. Let's try this again. Is it better?
Yay! All right.
There. Yeah, now it looks good.
Oh yeah, my bad. So this is, I had no idea it was there. But now that I'm looking at the live stream, I see it. I see it there. Yeah. So the market this morning, my dilemma was, on the one hand, I have a red arrow telling me that we have momentum top. On the other hand, we're at a double top, and looks like the indicator won, and we tanked hard. Now, what I've been saying for a while is that Bitcoin is fully correlated with the stock market, and a bullish stock market day will make a bullish Bitcoin day, and a bearish stock market day will drive Bitcoin down. And you can see that we have a red candle today. Now, Bitcoin didn't fall much, but it still fell. Bitcoin fell about $100. So there you go. There's your correlation. So what am I expecting now? I'm expecting that this, look, I've been wrong before. I've been trying to time a top in the stock market since this red arrow here. And then I tried again on this red arrow. And then there was another red arrow right here at the top. You don't see it on the cash chart, but you do see it on the futures chart, which is why I took the short trade like a month ago when we were right there. Actually, I should drop this one. I'm going to go with our new indicator. So I took this short and I got stopped out, but then I took this short and this short kind of won, but then I got stopped out over here. And now this was another short in the futures that came in on Friday, and the short in the cash market is coming in today. So they're not perfectly in line, but they're in line close enough. And if the stock market finally starts to tank, Bitcoin will as well. And this is major support for the stock market at 2,900 or right at 3,000. I think this is a top, and I am expecting lower prices the rest of the week. And it's very easy to know when I'm wrong. I am wrong if we rally back to new swing highs. So I'm still looking for a significant correction in the stock market. And that is pretty much it, unless Jimmy has questions.
No, I think that looks reasonable. Although the double top looks like it's going to happen.
Yeah, no, that's fine. But you see, a double top, this is not really a classic double top to me. Yes, the price did reach it, but look at the two candles. Like this is, this is nowhere close. So there was a swing high, but the close is significantly lower than the prior close. So this looks like a double top, but this is not the kind of double top that screams higher prices. This today itself screams more like we are about to correct significantly than it does more highs to come. One last word on the weekly Bitcoin chart. We are still being held back by this downwards sloping trend line. And I still think Bitcoin has a high probability of pulling back to that $7,000-8,000 area before the eventual breakout. I'm doing pretty well on my bet from December of last year that Bitcoin will not close more than 90 times above 10,000 this year. I've only lost 7 of the 90 days, and we have less than half a year to go. All right, so this is where I'm going to leave it, and thank you guys.
Thank you for your insights, Tone. We got Tone Vays, our Bitcoin trader, educator, consultant, and Jimmy Song, our Bitcoin tech guru, all things about programming. We ask Jimmy. And I'm Christine, you're a New York-based journalist. Thank you very much on this edition of Bitcoin Brief, July 13th.
Fiat Delenda Est.
And we are done. Oh, you didn't finish your statement correctly, Jimmy.
It's all right.
This song is done. Bye, guys.